Hi, and welcome to The Full Perspective. I'm James Thaler, U.S. News Editor for Inside PNC, filling in for Charlie Thomas. Each week, we'll be talking to some of Insider Publishing's senior staff to dig into some of the week's most significant stories. Today, I'm joined by Insurance Insider's Managing Editor Katrin Shih and Trading Risk's Managing Editor Fiona Robertson. Thanks for being with us, guys.
Hey.
Thanks, James.
So starting this week off, we got some news about an increase in claims in Florida tied to Hurricane Irma. Fiona, just starting with you, what are you seeing?
Yeah, so this was a story from one of my colleagues, Jeff, and he's put out some data that showed that the number of new lawsuits that Florida insurers received spiked to the highest level in June, which was the last month that records were available, since August last year. In fact, higher than that. So it was 4,600 new lawsuits. And I think it was just presented as part of this anticipated spike in claims that would come through before the 3-year statute of limitations expires on Irma. So can't quite believe it's already been 3 years since Irma. It doesn't feel like that long ago, but here we are, 2020. And I suppose, it might just be like a little final jolt of pain for reinsurers, although realistically, I think probably everybody's fairly fully reserved, you would hope at this point. QBE did report some Irma deterioration when they came up with their pre-announced Q2 cats this week. So, possibly there will be some further loss creep to come. And I think everybody's a little bit sick of the word loss creep, but there you go. I think one thing that is worth highlighting perhaps within that's a bit more positive is that the AOB claims, or assignment of benefits claims, were actually not a peak for the past year. They were, in fact, they'd gone up, but they were lower than they had been for several months throughout the past year. And I think that does show that some of the reforms that Florida state has been trying to achieve to try and help address the pressure on property insurers and to ultimately bring down the costs for citizens of being insured is working, hopefully. But to me, it also brings up this question of, well, okay, it's been 3 years since Hurricane Irma. Do people really need that amount of time to file a claim for Hurricane Irma to figure out whether they've had a loss? You'd think that possibly a much simpler way of trying to clamp down on some of these issues might be to just shorten the statute of limitations. But obviously that's a question for much bigger fish to fry than me. That's just my thoughts.
So it seems like that there'll be more time before the full benefits of AOB reform will unfold, and I guess we'll be watching that in the next couple of months. So the other thing that came out this week was Lloyds announced that they're going to be setting up a protective cell company to attract ILS capacity. Could you comment on that?
Yeah, so that actually came through just last Friday when I think Lloyds released a bit of an update on how they're doing with the future at Lloyds plan. So it's still, very much not in the full public realm what they are working on. Lloyds has just said that they've filed an application with the PRA to get some kind of PCC structure up and running. So we don't quite know what it will involve, but I think Lloyds has been fairly clear about some of the things they want to try to achieve with this capital plank of their plan, and that's to help syndicates get third-party capital in a bit easier, make the whole process of investing at Lloyds a bit more friendly for investors. At the moment, it's quite expensive, time-consuming to get a vehicle that will allow you access directly at Lloyds. So I think it's a really good time for them to be doing this, as well as the other point to make that next year Lloyds buyers, as in reinsurance and retro buyers, are probably going to face a much more challenged market because of COVID, particularly on the retro side. Lloyds syndicates are very dependent on retro, so good time for them to be pushing ahead and trying to get these new initiatives in place.
Thanks, Fiona. Another development we've recently seen at Lloyds is we've seen more company or syndicates starting up NH operations. Katrin, what are your thoughts on what you're seeing there?
Sure. So actually, only one of those is the Lloyds syndicate, or has the Lloyds platform, which is Lancashire. But just sort of one of those weeks really where just 3 things happened at once. So there were 3 reports of entries into the accident health class this week. So that was Lancashire, as I said, Convex, which doesn't have a Lloyds platform, and an MGA called Optio. Now, it's lots of people would say, I suppose, that everyone's going to enter new classes and everything because there's so much opportunity and there's lots of growth to be had. It's a great rating environment, but this is actually somewhat surprising given that A&H is actually one of the very few classes which have resisted rate rises over the past 18 months or so when the whole market started to see this upswell. So there had been a bit of upwards movement after a few market exits in Aspen, Markel and Starstone, but actually the movement wasn't really that significant compared to like the double-digit rate rises you're getting in lots of other lines of specialty classes. Now, of course, there could be more to this. A&H is a really broad church. It has personal accident in there, some travel insurance in there, and it could be that there are sort of niches within the A&H class that are registering more significant rate rises, and therefore that's where these players are sniffing out the opportunity. And you'd kind of expect that from sort of savvy writers such as Lancashire, for example, that tend to be quite specific in what they tend to pursue. So these could actually be selective market entries, but nevertheless, I would think that the broader A&H market may be a bit worried that all this extra capacity will extinguish that rate momentum, because after all, it was because of overcapacity that the rates were being so sluggish up until now. But definitely one for us to dig into further.
Fiona, did you want to come in?
Oh, well, I was just curious, I suppose, as to whether, I wonder whether it's also perhaps they're seeing A&H opportunities because of COVID as well. Don't know whether there's some kind of uplift that is finally expected if they've been resisting rate rises for all this time, whether that will start to change.
Possibly. I mean, it's one of those, we kind of looked into it at the beginning of the pandemic, and it was one of those classes that largely seemed to escape really significant COVID losses. I mean, I'm sure there'll be things that will drip through, but it's an interesting one. I think, it's definitely one that Sam Casey, who is our A&H reporter, is going to be looking into in the coming weeks.
Right. And in addition to some of the A&H startups that we're seeing, we've also seen a couple of initiatives tied to pandemic risk. I believe there's been 3 groups that have announced new product launches in the last week or so. Do you think that's going to become a trend? And obviously, it's something the market needs, it sounds like. Yeah,
so there's kind of a bit of a general theme going on here about sort of pandemic and COVID and the London market in our reporting this week. So you're right, there have been kind of 3 announcements this week which actually address pandemic risk with insurance solutions, which obviously the market's kind of and the insurers are kind of crying out for. So you've got yesterday, don't know what day it is, there's a new syndicate for specifically for ensuring the transport of COVID vaccines. That's been pushed through really quickly through the Syndicate in the Box initiative with InsurTech Parcel and managed by Ascot, but there's also lots of other collaborators in there, AXA XL, McGill and Partners, and Gavi, which is a sort of worldwide organisation to supply vaccines to emerging economies. You've also got, this was an exclusive by Rachel Dalton, the Munich Re Innovation Syndicate setting up a Lloyds consortium for pandemic BI cover, predominantly focusing on the US. And then you've also got the intermediary 180, which has launched a pandemic protector product, which also is for BI cover with pandemic trigger, and that is backed by London market capacity. So this is one of those things that, there has been criticism in the past that London hasn't been innovative enough and not actually stepping up to address that insurance gap with suitable products. So you could take this as like a good indicator that people are really stepping up to that plate, I guess, with this huge emerging risk which hasn't been addressed to date.
I think that's the thing. There's appetite for people to write this risk, isn't there? It's just that buyers weren't there before. I think the life ILS funds as well would be prepared to offer it. And we had a piece this week about one of them, Leadenhall Capital, starting to offer parametric structured, where you're sort of setting it not on indemnity, but you're setting the trigger based on, mortality rates, I suppose, as Grimmer's is. But, there's a need for that cover. And
people are stepping up to it. Yeah, you're right. I suppose the second element with the COVID coverage we've been doing this week is that we did a bit of a canvas of London market executives, asking them what their kind of gut feel for this loss was now that the losses are starting to crystallise and people are trying to get their arms around it a bit more. And, you know, like way back in April when everyone was kind of at peak fear, there was talk of worst ever loss, biggest insured loss ever. And it kind of feels like now that maybe that was slightly overblown. People are kind of talking about it as sort of manageable, as a decent sized cat loss, a few mitigating circumstances, which means that perhaps the overall insured loss may not be as big as it was feared it could be. Obviously, it falls very sort of unevenly across the market depending on where your portfolio is weighted to. But definitely, you know, there's been some earnings disclosures this week with Beazley and Score, and analysts seem to be surprised on the upside on their COVID exposure and their profitability. So that's probably one to watch for the rest of the month.
Absolutely, and it seems like pandemic risk isn't going to be going away anytime soon. So it sounds like there's a huge market opportunity for whoever gets in there. So that's pretty much all the time we have for today. We're going to wrap up there. My thanks to Katrin and Fiona for joining me today, and thank you for watching. Until next time, stay well, keep safe, and we hope you'll join us soon for another episode of The Full Perspective. Thank you.